Hey, what's up, everyone? This is Ryan from Sell That Option. We are in our daily market analysis. We're actually looking at yesterday. Today is December the 5th. We're doing it for December the 4th, and the reason is because the markets were closed today for George H.W. Bush's funeral. So let's take a look right here. Futures are getting pounded. We're down almost 1.4% in the NASDAQ. We're down 1.1% in the S&P 500 minis. The Russell, we're not quite down as much, 0.8 of a percentage point, but the VIX futures are up over 6%. So looking like we're going to have a gap down tomorrow, and that we are going to have a pretty significant gap down, and that the VIX is going to be up. Let's take a look at these charts. We'll start over here in the S&P 500 mini, or the S&P 500 ETF. One of the things that we talked about is even though we had a very significant gap up the previous day, we were, and I've redrawn this trend line here to better perhaps take a look at this trend. We had this gap, but even though we had the gap, I wasn't necessarily sold on the gap. I had still wondered, even though we closed above the 200 and the 50 simple moving average because of the VIX, and I'll show you here in the VIX, I wasn't 100% sold. I definitely think that we got hit back down, and tomorrow we likely will see this bear cross, this death cross here. We'll see exactly where we get on it. It's currently 276.84 versus 275.86. So we might not get it, but in the coming days, if we do it, but if we get a massive gap down, I think that's certainly going to give credence to a potential death cross coming here. I'm still bearish. I'm certainly still bearish. This, couple of straight days, almost 20-point gain. We saw almost a 10% move in the market from this day in late November, right? Almost a 10% move in the market, but then we again saw close to a 5% move here. I think it was 3.5 or so yesterday, and so I certainly still think that we are bearish on the market. Let's go into the S&P, the VIX, which is the put derivatives of the S&P 500. One of the things that you'll notice here is that, and I specifically talked about this in our last video, we were right in this box, right? But we didn't close numerous days into it. And so what I had said is that I wanted a number of days close in the box before I began to change my sentiment and go bullish on equities. I still certainly think that we are probably bearish on equities, and this isn't investment advice, but that is my personal opinion. Also, so I'll pop in VXX here. Okay, let's go into the NASDAQ. We have pretty significant move here too. We also have the beginnings of this death cross, right? So we are 172.67 versus 172.45. If we see a pretty significant gap down, like I'm guessing, even potentially down here into the 164, 163.5 area, based on where the the futures are right now, that's certainly a possibility, and we could potentially see this occur. Let's go to our diamonds here. Diamonds, same thing, closed below the 200 simple moving average. But interestingly, the Dow Jones Industrial Average is seeing a little bit of a different chart there. And then finally, our Russell 2000. Go to the small caps. Again, we are very much, I think, in a bear market here. Important, all right? I want to note this. If this move sticks, right? We saw $7 right here, right? We saw a lower high. Okay, so we had a high here, lower high here, bearish. Okay, so we are bearish right now. So we'll certainly be interested to see what happens there. I definitely think that this chart is a bear chart, right? Unlike here where we had high or low, right? Higher low, higher low, higher low, higher low, higher low, higher low. We are seeing a lower high right here. Clearly a lower high than right there, and a lower high here. And so we can begin to take a look, and of course we do generally treat our IMW as a leading indice. Okay, let's get into our premium selling ETF charts, which is the name of the game here at Sell That Option. We'll just very quickly go through. We saw a down move in EWZ, a down move in FXC. Interestingly, big move, right? Big move here in the 20-year bond ETF TLT. Okay. In fact, there's an article out there. If you all pay attention to that particular article, there is an article out there that specifically talks about an investor making a $1 million. I think it was a call credit spread that they placed on looking at this bond market. And so bond market yields are flattening. And when the yields flatten, we also know that it is bearish potentially for equities. So GDX, no major movement there. We saw a gap up in gold, but it gave back very similar candle to the previous day. XOP, oil got hit hard. This is XLF. Oil continues in OIH. IWR. Our members adjusted, potentially adjusted IWR. EFA, this is our... And actually, let's talk about EFA. I think EFA is somewhat important right here. We also see a lower high here 3 days ago, versus the lower high in early November, which is still lower than the high in mid-October. And the reason that I bring this up, right, and if we want to continue to go back, we can probably see very similar things right here in EFA, is because EFA is a conglomerate of, it's essentially a world, if you will, ETF. Now let's take a look at oil. See what happens with oil, right? See what happens with oil. I like that my whole moving average is beginning to shift, and so it begins to raise flags for me as to potential trading opportunities. XRT, our retail, got hit. SLV, silver. We saw FXI over in China get hit as well, and so XLE there in oil. This is actually an interesting chart getting ready to happen, right? And so we're getting ready to see some moving averages cross. Okay, so these are our major ETFs, general market overview. If you have any questions, please feel free to reach out to me at Ryan, RYAN, at Sell That Option. And if you just want to chat trading, chat trading theory, chat market theory, chat portfolio theory, I love this stuff. Feel free to contact me. And then otherwise, let's have a great rest of our trading week.